Dan Ives of Wedbush Securities was back on CNBC. This time, he's talking about Tesla's strong Q4. He talks about the demand actually strengthening for Tesla. Yes, strengthening, not weakening. He has a bullish forecast for Tesla's 2024. Plus, he also is quite bullish for tech and AI plays for this upcoming year as well. We've got Jeff Lutz joining us. Jeff is a former supply chain executive and former QA executive as well of many Fortune 100 companies. Welcome, Jeff.
Great to be with you, Herbert.
This is one of our favorite activities together. We like to look at these analysts when they go on CNBC. Let's take a look at how they reported the Q4 results. Let's start with LeBeau talking about this.
Tesla delivery numbers are just out. Phil LeBeau joins us for more on that. Phil, you're back.
I am, Becky, and these are better than expected numbers from Tesla in terms of topping its own guidance, as well as better than what analysts were expecting. Let's start first off with Q4 deliveries of 484,507 vehicles. The street was expecting closer to 473,000, so better than analyst expectations. And because of those deliveries topping 475,000, they topped their full year delivery guidance of 1.8 million vehicles. Officially, it's 1.808 in terms of 1,808,000 vehicles delivered in 2023, an increase of 38%. And again, the street guidance, or I should say Tesla's guidance was for delivering 1.8 million vehicles. By the way, fourth quarter production, just under 495,000 vehicles. We will get the fourth quarter and full year financial results after the bell on the 24th of this month. So what, 3 weeks away in terms of when we hear from Elon Musk in terms of the setup. And that's also, by the way, guys, when we are likely to get the company's guidance for deliveries for 2024. That's when we will probably get them, again, 3 weeks from now. Guys, back to you.
Hey, that didn't sound so bad, Jeff. Normally, LeBeau is quite negative about Tesla. What did you get from his commentary?
Yeah, I think Phil's a good reporter. I actually think that negativity, those stories, those scenes are written, they have writers, they have producers, they have people putting together the chyrons at the bottom of the screen. And, if Tesla missed by 10 units, that chyron would have said miss. But the fact that the chyrons at the bottom were just showing information, production of this, deliveries of this, and really they could have used the word beat. And because a lot of those chyrons and screenshots are what's shared online, when you say the word Tesla and beat, but that won't get as many clicks as if Tesla actually missed. So it's interesting when they miss, the words miss are all over the screen. They appear every hour on CNBC talking about the miss, talking about, whatever, talking about other competitors and how they're doing better. But here, Tesla literally beat every consensus view, and they struggled to put the word beat on the screen. But in terms of, I think Phil is doing the job that, I think if you follow my timeline on X, I do post a lot about ad revenue, and I do post a lot about how I think it drives the sentiment at these major media networks. And the fact that Tesla doesn't advertise and the rest of the auto industry does several hundred million of advertisements on CNBC and NBC Universal yearly, I think it really gives them much better coverage. They take negative situations and they kind of gloss over them, where they just report them at one point in time throughout the day to check a box. For example, this 1.9 million unit recall, hardware recall on Toyota, multiple recalls actually, over several million units in the last month. And a lot of it was really buried kind of in the background, happened over the holidays too, by the way. And so anyway, yeah, they manage news differently, but with this Tesla production deliveries, it was a beat on every area you could imagine. I know someone was trying to say that the Model 3 and Y production was a miss, and if you're digging into that level of detail, I want to see somebody doing that for, Ford and the Mach-E or various models of that, but you won't see that. So anyway, we're still dealing with that media bias. It's probably going to get worse before it gets better. You're going to see BYD, you're going to see a lot of news and story about them, even though most 99.9% of the people that talk about it have never seen a BYD vehicle or been in one, but they'll talk glowingly about the company. And so you'll see more of that. And I think just from a media perspective this year, you're going to see, you can see that negativity ramp up as EV sales ramp up, as the political theater ramps up for elections this year. I think all these things are going to come together. And it's going to be interesting. You've seen Tesla now in the last month go on the offense as it relates to media coverage of their company. And so if they do more of that, and our community continues to respond to unfair coverage, I think we'll be in great shape. But you can't look at that report from Phil and say that it was meaningfully unfair in one direction or another. And I think a lot of the source for this comes from the production and management teams at these networks, and not necessarily the on-air talent.
Yeah, good. Okay, well, it was an incredible report by Tesla, so that helps. And then they have Dan Ives on quite a bit. He's the analyst for Wedbush Securities, and he's very bullish for Tesla. Let's listen to what he says. And
next guest, he was right about the big rally. Dan Ives, Wedbush Securities analyst. I would guess by the end of this year, you'll be atop the leaderboard of CNBC appearances, Dan. Although I'm willing to take an over/under on that. And you know what? I'm going to love every one of them. So happy New Year.
And it's great to be here.
Good to see you. You had a good call on tech overall. You continue to be quite bullish. Let's start with Tesla, though. Just give me your take on those numbers. Phil just mentioned 2.3 million. Are you going to be towards the high end in terms of what you expect them to deliver this year?
Yeah, I think whisper expectations could be higher. Look, this was a strong result. You look what's happening in China. There were fears there, and it was actually a source of strength. We think a record quarter in China. So I do think this is an important, sign that demand's actually strengthening for Tesla. It continues to be maybe EV demand soften, but not Tesla demand, and that's the important thing going into 24.
Yeah, where is that line? Why is that the case then? And in particular in China, where BYD is such a strong competitor, are they going to be able to maintain their market share?
Yeah, BYD has done a phenomenal job, but I do think if you look in the driver's seat, it's Tesla and BYD. Gained some net share from NIO and others. And in China, especially if you look at the last few quarters, there were fears that this price war was going to continue. It actually hasn't. See, now, to Phil's point, you're seeing price stabilization. That's very important because now the Goldilocks scenario, margins upticking, demand upticking. That's where, in our opinion, you see $1 trillion market cap for Tesla over the next year, despite many of the haters continuing to hate.
Dan, I have to get your...
Okay. Goldilocks years, margin uptaking, demand uptaking. I love listening to this guy. What do you think?
I agree with it. I mean, the one thing that I've been talking about is this gross margin piece troughing. I know some have a mixed view on Q4. I do believe that we've seen the trough in gross margins. Who knows what can happen going forward? But that's what I believe at this point. And then you've got volumes increasing. Again, I think we've got the wind, at our backs as it relates to. There's certainly headwinds out there, right? Especially if there is a recession. And recessions are not all created equal. They can be very short in duration. They can be very shallow in depth, or they can be deep and they can be longer. But they're usually pretty short in duration. And I don't think anybody's predicting a deep recession as well. So there's headwinds out there. But if you look at the tailwinds, you've got this point of sale credit. There's no auto manufacturer that has more vehicles, a higher percentage of their lineup that are going to be receiving this full auto credit than Tesla in North America. And you've got the EV adoption curve somewhere between now 8 and some say 9% now in North America. So if that goes to 12%. In the following year, you're going to take 1.2, 1.3 million EVs on a 16 million unit predicted SAAR for the U.S. That could put it up near 1.9 million or even 2 million. Where's that supply going to come from? No one's increased their supply. The more EVs that the competitors build, the more money they lose. So they're not going to be increasing supply until they can figure out their unit economics. Tesla has been increasing their capacity, both at the vehicle assembly piece and at the cell pack assembly piece. And of course, they've been adding models. This will be the largest year of model introductions with the Cybertruck and Model 3 Highland that they've had in their history. So, and then if you look at China, it looks like the auto sales have been picking up again, and I can imagine that Xi will stimulate that economy. He's not going to let it, this return from COVID be stagnant for too long. And and then Europe has had these pockets of recession and slowdown, but that should improve over time as well. And Tesla has a European presence. They don't have to import their cars. They are importing from Shanghai, but they have a European presence. And if there is any regulatory scrutiny or pressure, back to China, for example, Tesla can leverage their European presence. So they're in a really good position, I believe, for 2024. So if margins are stabilizing, we saw the MSRP. I've always talked about this. The MSRP changes were deep and global in January and April of last year, and then they really trailed off to smaller regional changes, and then even saw a bunch of price increases in Q4 of last year. So I think that piece of it is stabilized. And what has that allowed to do? That's allowed the supply chain to go back, work on cost reductions from their suppliers. It's allowed Tom Zhu to stabilize and stabilize utilization and get costs out of the gigafactories. And it's really put them in a good position for 2024. So I think anyway, with all of those factors coming together, I think they've got a good, strong year ahead of them. I think there's a lot more kind of tailwinds than there are headwinds for the year upcoming.
Okay, this is good news. So it's really hard, I think. I just want to make a commentary. It's hard for people who are forecasting good news because people just hammer you. You're being optimistic and you're not looking at the potential things that can happen. So we're seeing here that margin stabilizing could actually improve. We got demand increasing for Tesla. I think more and more people are starting to at least say that narrative rather than saying that EV demand overall is falling. But demand for Tesla is continuing to improve. And as you just pointed out, as the demand for EVs in general rise, right? But yet the legacy players, OEMs are not able to deliver that. It's going to open it up for Tesla to fill in that demand of increase. So the demand for Tesla should continue forward. China's looking really good. And so we'll see what happens. It's all barring macro, of course, but let's listen to the rest of Dan Ives. He's talking about tech and AI plays, of which we know Tesla is. So let's listen to what he says, and then we'll...
moment. And it's going to create a bull market overall for how many companies in technology this year, Dan?
Well, yeah, and talk about it here is that our new AI checks, and me and you've talked on the program a lot about use cases. Mm-hmm. Use cases are exploding. I mean, the average enterprise right now that we're talking to is seeing 15 to 20 potential use cases within their companies. That's why right now we think it's going to be 8-10% of budgets. And I think that's the important thing. You look, it's not just the godfather of AI and NVIDIA and Jensen. It's not just what's happened in Redmond. I think you're going to see the spread across the board in software and chips, which is why we believe tech stocks will be up 25% this year. And we could have some ebbs and flows, but I believe it's get out the popcorn moment. The new tech bull market has begun.
So the new tech bull market has begun, 20-25% increase. Every company is going to have at least 10% of their IT in the budget for AI. Is Tesla going to play in this? Is Tesla going to get some of that?
Yeah, I do. I believe they will, although in terms of it reflecting in the 2024 financials, probably not a lot. What I do believe the 2024 will be for Tesla is they'll be in capital acquisition mode and they'll be in development and construction mode of that network infrastructure for AI, so they can handle more training and they could potentially handle work beyond Tesla. But first, they've got to be able to demonstrate. I think when they have that Chat GPT moment for the vehicle, it's going to open up a lot of different, people's eyes to, the capability of this team and of the network infrastructure and compute power that they've built. And, from there, first off, Tesla will be able to expand their own solution, beyond the North America geography, which in itself is going to drive tremendous amounts of revenue and gross margins into the company, whether it's expanding to Europe or expanding to China for full self-driving. But while they're doing that, a lot of competitors are out there that they're not in the position Tesla is from a data perspective, because Tesla has the 5.5 million robots on wheels on the roads collecting data, hundreds of millions of miles of data. They're not in that position. They don't have the they won't have the AI workforce, the engineering workforce that Tesla has been acquiring over a number of years. Although arguably you can say that there are companies that are close out there in big tech. But I see Tesla expanding that lead, given the fact that they actually have the device side of the equation and they have the network infrastructure side of the equation. And the final piece of that, so you have the training, you have the actual data, you have the resources, then you'll have the compute power, where Tesla's projecting they have the largest supercomputer by the end of this year. And when you put all those factors together, they're going to be in a position to really start taking a huge slice of that AI revenue. And again, I think they're going to be in a very unique position, because NVIDIA doesn't. And if you look at NVIDIA, for example, they have the network infrastructure side. They're delivering the picks and shovel, the hardware, and they're delivering their software piece to support it. But at the end of the day, you're not buying an NVIDIA. You're buying somebody else's product that's using NVIDIA. There's nobody that's end to end like Tesla, and it's completely vertically integrated all the way from basically the delivery to the customer to upstream in silicon development and network infrastructure development and production. So I think it puts Tesla in a very unique position. This goes back to the other conversation we're having of is this the right stock price? Is it investable? And if you just look at where they are today versus where they're going and all those different vectors I laid out, it would show you that they're a pretty special company that should you definitely keep your eyes on. So I think for tech in this bull market, I think it's going to continue. There's been a kind of a lull in investments as many of these companies were tightening the belt over the last 18 months. And now, if you just look at, this is one important takeaway, if you just look at the hiring practices and what's happening at some of these big tech companies, and just take Tesla, for example, Alexandra at Tesla Boomer Mama does a great job of highlighting these postings. The span and scope and depth of these postings, the quantities are increasing rapidly. Tesla's investing in the robotics side. They're investing in the AI side. They're expanding now. They're re-expanding their gigafactories for battery and vehicle production. So when you see this investment accelerating, that these companies, these leaders of these companies, they can see ahead in the future, at least from an economics perspective, and they're kind of, I don't want to say given the all clear, but they're not in this mode. They're not in the retrenchment mode they've been in the last 12 to 18 months. So when I bring this back up to Dan Ives, and what is he saying about this new tech bull market, 20,000 NASDAQ? If you follow how these companies are investing, they're not investing to not make more money. They're investing to make more money and to grow their output. So to me, I do see some alignment.
Mm-hmm. Can you speak a little bit to what's going to happen to Tesla's sales and even the stock now that we're moving? It's looking like it to a better macro, right? We got interest rates hikes, interest rates cuts being planned. You've got money that's sitting on the sidelines that are now being invested, which is being spread over not just the Magnificent Seven and across the board. And then you've got, the tech boom, right? This idea that tech companies and the growth companies like Tesla are going to be, it's back to risk on again. And these are the companies that typically, so basically we suffered through the last couple of years through this process. What happens when it reverses? Isn't it pretty good news for us? What's your expectation?
Well, Tesla's got to put up a good forecast in 3 weeks, number one. If they put up a forecast that says, 2 million or even 2.1, I think that'll be met with some level of disappointment. Now they could beat that easily, which would be great. But I think if they put up a sizable forecast, something in the 2.2 to 2.5 range, that's I think the kind of the
signal that they are bullish about the economy as well. Okay.
Yeah, I mean, you've had Elon come on to 3 successive earnings calls and be very bearish on macro, and in turn bearish on Tesla and the risk. And he, in terms of the impact on Tesla, he's been partially correct, and that's fine. So he's got to start it off there. You say, what does this mean to Tesla? They've got to ship more product. They've got to improve their gross margins. And they've got to get us closer to, or get some of these big bets over the line. Can FSD expand? In the first half of the year, are we going to now see official expansion of FSD? Are we going to have a partner identified, a licensing partner for FSD identified in the first half of the year? These are some of the triggers that could really, I think, start in the right direction. And then some of these other things are going to take they have a longer purview to play out, whether it's the robots or whether it's robo-taxis and the network infrastructure side. But if they start putting up these big numbers, if you start seeing more Cybertrucks coming out, how many of these $100,000 Cybertrucks are they selling? I mean, it seems like
they
this
sold one to you.
Series yeah. I mean, it just seems like gladly they did.
I don't know where you got. You just bought a friggin' Model X, didn't you? A Plaid X, and then you, dude. You couldn't help yourself, right? That's what's happening to everybody else.
Yeah. So I just, if you extrapolate what they're doing, it goes back to, they've got to deliver results. Okay. They've got to grow the top line. They've got to grow the bottom line. And then these bets have to get closer. And I think a couple of these bets I think FSD going global. I think this V12 coming to fruition and actually being end-to-end video and being in production, and FSD going global. I think now you're starting to get the toe across the finish line. And with that, you say, what does it mean for Tesla? I think, there'll be expansion, if these things start happening.
Yeah. And I think you have mentioned in this show many times already that what needs to happen is Elon needs to get on a call and he has to say something that's a little bit more bullish, more dovish than right now. He's been so negative. And when you have a CEO of your own company warning about a potential future, then everybody's a little skittish. But their actions, like you said, they're hiring, even some of the actions with Giga Mexico, looks like that it's opposite of what he just said. Maybe he's already turned, but he hasn't said anything yet. And maybe 3 weeks from now, he will say. And then we should also mention that Elon already announced on X that, isn't it after the earnings call? After the earnings call
and the 24th? Yeah.
Yeah, he's going to come and he's going to go and do a 2024 kind of what's going to happen in the future and look back in the 23 as well, kind of state of the nation of the company, both SpaceX, and he'll do one for Tesla as well. So some of us are speculating, well, he wouldn't have done that if there wasn't a little bit more optimistic of the future. Maybe he's just using that as an opportunity to have an event on X, because that's another one of his companies he's promoting. But
no, yeah, no.
Good news.
If you rewind the clock back to 2022, we had 2 successive quarters of negative GDP. Who was the first company to go and do layoffs? It was Tesla. They were laying off in the summer of 2022. Remember, it's already a year and a half from now. So you had the signs there. Then you had, more bearish Elon emerge on the calls. So you had this retrenchment in hiring, retrenchment in factories, in terms of factory expansion. And then you had bearish Elon. Well, now we're starting to see all this hiring, both the span, the scope, and depth of hiring. You're seeing all this progress on the bets. You saw them nail and exceed the production and deliveries in this quarter. So it would be very strange to see, them opening the spigot on hiring and all the factory investments, and to hear bearish Elon get on the January 24th call. So if anything, he should probably be a little bit more even-keeled, if not more upbeat. I don't want to tell him how to be. He knows what he needs to do. But if you're just connecting all these things together, they did the headcount reductions, the retrenchment. They cut down all the hiring. the factories and so forth, and then bearish Elon emerged, and now the reverse seems to be happening. So let's see if it all plays out. I think it all starts there.
Yeah. But what your point is still true that you made a couple shows ago, that you do need to see Elon step up, because he went and said some very bearish things. He needs to come in to reverse that before the sentiment can change on Tesla. And so we're hoping that he will do that this time around. Wonderful. Okay. Thank you so much, Jeff. That was fantastic. Appreciate your feedback there. Follow Jeff on X at the Jeff Lutz. Thanks, everybody. Bye-bye.
Thanks, Herbert. Thanks, everyone.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.